The world is slowly but decisively shifting in ways most people never notice until the consequences become impossible to ignore. Nations rise and fall not only through wars or dramatic political events, but far more often through quiet, strategic decisions made behind closed doors, decisions involving money, resources, and advanced technologies. Today, two countries stand at the center of this transformation: China and Russia. Their coordinated moves over the last decade reveal something unmistakable: an ambition to reshape the global order and weaken the dominance the United States has enjoyed for generations. For the better part of a century, the United States has maintained unparalleled influence through two primary sources of power. First, its control over global finance, maintained through the supremacy of the US dollar. Second, its leadership in high-end technology, especially in the semiconductor industry. These two pillars gave Washington immense leverage: the power to regulate international trade, isolate adversaries from the global banking system, and determine who could or could not access the most advanced technology in the world. But China and Russia have spent years studying America's strengths, and more importantly, its weaknesses. They understand that if they want to create a world where the US no longer holds all the economic and technological keys, they must challenge American dominance in these precise areas. And slowly, methodically, that is exactly what they have been doing. Russia focused on building energy dominance and forming deep partnerships with countries that rely heavily on its oil and natural gas. It also strengthened its military capabilities and developed new financial alliances to protect itself from Western sanctions. China, on the other hand, concentrated on manufacturing power, rare earth mineral control, and rapid technological advancement. Its Belt and Road Initiative extended its economic influence across Asia, Africa, and parts of Europe, giving Beijing new leverage and access to essential global resources. But the most important and the most alarming development came from China's relentless pursuit of semiconductor independence. For years, the head of America's technological power has been the global chip supply chain. Every modern device, from smartphones to military systems, relies on advanced chips designed in the United States and manufactured through America-controlled processes. China knew that if it remained dependent on foreign chips, it would always remain technologically vulnerable. So China began investing billions into chip research, AI infrastructure, and fabrication technology. Slowly but surely, it started closing the gap. Even though US sanctions tried to slow it down, China found alternative paths, developing new lithography methods, building secret chip supply networks, and securing mineral resources essential for chip production. This didn't happen overnight, but the impact is becoming clearer each year. At the same time, Russia strengthened economic ties with China, India, and parts of the Middle East. These alliances were about more than trade. They were about creating a parallel economic system where US sanctions and banking restrictions held less power. Together, China and Russia now support alternative financial systems, explore non-dollar trade agreements, and invest in technologies designed to bypass US control. These developments might seem distant or irrelevant to everyday life, but they carry massive implications. When global power structures shift, supply chains shift with them. Prices rise, economies weaken, currencies lose value, and nations that once led begin to struggle. And what we are witnessing now is a slow erosion of Western dominance, replaced by a growing China-Russia axis motivated by long-term strategy, resource control, and technological independence. But this shift didn't happen suddenly. It was the result of years of planning, years of subtle moves, and years of watching the world become increasingly dependent on resources, materials, and technologies controlled by China and Russia. And while many still believe the United States holds unshakable power, the cracks in that foundation are beginning to show. What comes next is a question the entire world should be asking, because we are witnessing the early stages of a new global era, one where the balance of power is being rewritten not by war, but by strategy, economics, and technology. The process of de-dollarization between Russia and China is not just an economic adjustment. It is a strategic revolution that challenges one of the most powerful tools the United States has ever possessed. For decades, the global financial system has operated on a simple reality. If you controlled the dollar, you controlled the world. Every country needed dollars for trade, for reserves, for purchasing oil, and for participating in global finance. And because the U.S. both issued the dollar and governed the international networks that moved it, Washington held unmatched influence over the global economy. But Russia and China have spent years preparing for the moment when that influence could be weakened. They understood that the dollar's strength was not in its physical form, but in the trust the world placed in it and in the systems built around it. Break that trust, build new systems, and slowly, the foundation of American financial power starts to erode. This is exactly what has unfolded since the early 2010s, but especially after 2022. The sanctions placed on Russia acted as a global warning. If the United States can freeze a nation's reserves overnight, then no country is truly safe as long as it depends on the dollar. To Washington, sanctions were a show of power. To Beijing and Moscow, they were a turning point, a sign that they needed an alternative immediately. So both countries accelerated the construction of a new financial architecture. China expanded its cross-border interbank payment system, CIPS, a direct competitor to SWIFT. Russia built and strengthened its own SPFS banking network. Bilateral trade shifted from dollars to yuan and rubles, and new agreements allowed direct currency swapping without involving Western banks at all. By early 2024, over 90% of trade between China and Russia no longer touched the US dollar. This was not symbolic, it was structural. Oil contracts, pipeline payments, machinery deals, technology supply, even agricultural shipments were now being settled in local currencies. Russia began holding more yuan than dollars in its reserves, a historic reversal that would have been unimaginable a decade earlier. China, meanwhile, saw the yuan becoming increasingly popular among countries facing Western pressure or seeking alternatives to dollar dependence. The Middle East, Africa, and parts of Southeast Asia began experimenting with yuan-based trade agreements. Some nations even started using the yuan for cross-border settlements of commodities like oil and metals, transactions once dominated entirely by the dollar. This shift is extremely significant. If global demand for the dollar weakens, the U.S. loses one of its greatest advantages, the ability to print the world's currency without consequences. Nations buy U.S. Treasury bonds because they need dollars to function. If they stop needing them, America's financial cushion becomes thinner, and its debt harder to sustain. But for China and Russia, de-dollarization provides more than just economic independence. It offers geopolitical protection. Sanctions lose power. Dollar-based financial pressure becomes ineffective. And most importantly, both nations can design long-term strategies without fearing sudden disruptions from Washington. That is why both governments treat de-dollarization not as an economic project, but as a national security priority. At the same time, the strategic importance of semiconductors has grown dramatically. Chips are the backbone of modern power, controlling not only military capabilities, but also artificial intelligence, telecommunications, energy grids, satellites, and consumer technology. Whoever controls advanced chips controls the digital world. China recognized this early, understanding that if the United States controlled the world's most advanced chip technology, then America indirectly controlled China's digital future. So, Beijing launched the largest technological mobilization in modern history. Billions were poured into chip manufacturing, AI research, and advanced materials. Entire industrial zones were built for semiconductor production. Universities received record funding for microelectronics programs. Military and civilian research institutions collaborated to break through foreign technological barriers. However, the United States responded with a series of escalating chip export restrictions, blocking China from purchasing high-end lithography machines, advanced GPUs, and essential semiconductor components. Washington believed this would permanently cripple China's chip ambitions. Instead, it had the opposite effect. China doubled down. It accelerated domestic innovation, developed alternative chip-making technologies, expanded partnerships with Russia and Iran, and increased investments in rare earth minerals, the essential resources that every chip-producing nation depends on. This created a global split. One technological ecosystem led by the United States and its allies, and another emerging ecosystem led by China and supported by countries breaking away from Western dominance. As both sides reduced reliance on each other, the world drifted toward a more fragmented, competitive, and unpredictable technological landscape. What makes this moment even more dramatic is how perfectly de-dollarization and chip independence complement each other. These are not separate strategies. They are components of one unified plan. By reducing dependence on the dollar, China and Russia decrease America's ability to pressure them financially. By reducing dependence on foreign chips, they decrease America's ability to pressure them technologically. Together, these moves form a shield, protecting them from external control and giving them room to build long-term power structures. This is why the geopolitical rivalry of the future will not look like the Cold War. It will be defined not by nuclear standoffs, but by supply chains, chip fabs, rare earth mines, digital payment systems, and competing currencies. The countries that control these systems will shape the next century, and China and Russia intend to ensure that the United States is no longer the sole architect of global order. The deeper this process goes, the more the world edges toward a new financial and technological map, one where the corridors of power shift eastward, away from Western dominance. And while the full consequences of this shift are not yet visible, the foundation has already been laid. We are living through the early chapters of a transformation that will redefine global power for generations. As the alignment between China and Russia grows deeper, both nations have become increasingly aware that true strategic independence cannot be achieved without controlling the systems that govern global power. For decades, Washington shaped not only the financial architecture of the world, but also the technological pathways that other countries were forced to follow. Now, both Beijing and Moscow are determined to build parallel structures that cannot be influenced, infiltrated, or interrupted by Western authorities. A significant part of this effort involves building resilience in areas where the West once maintained near-total dominance. For Russia, the lesson was learned brutally in 2022, when more than $300 billion worth of its foreign reserves were effectively frozen overnight. Western banks cut off access, major companies pulled out, and Russia was disconnected from large parts of the global economy. To Moscow, this was not simply a sanction. It was proof that the West could weaponize the global system at will. The ruble's value fluctuated violently, and the Russian financial system had to be held together through emergency measures. But instead of collapsing, Russia adapted. It redirected oil and gas exports to Asia, built parallel financial channels with China, and encouraged Russian companies to shift away from dollar-based platforms. The government introduced capital controls, increased domestic production, and began using the yuan for both imports and exports. This process was painful, but it also created an entirely new economic reality. Russia discovered it could function without the Western financial system. China watched this unfold with great interest. For years, Beijing had been slowly diversifying away from the dollar, but Russia's experience accelerated China's urgency. It became clear that if the United States could freeze a major power's reserves so easily, then China, despite being the world's second-largest economy, was equally vulnerable. The conclusion was simple. True national security requires financial independence. That is why China's development of CIPS was not just a banking project, but a geopolitical necessity. CIPS allows cross-border transactions using the yuan without needing Western intermediaries. It offers an alternative to SWIFT, not as large, but steadily expanding. Today, more than 1,400 financial institutions across nearly 120 countries are connected to the yuan-based payment network. And while many countries still rely on SWIFT, the direction is unmistakable. A multipolar financial world is emerging. In parallel, Russia expanded its SPFS system, which now connects hundreds of banks domestically and internationally. Discussions between China and Russia about linking CIPS and SPFS into a unified cross-border network have intensified. If such a system is fully implemented, it could allow seamless yuan-ruble settlements for trade, energy, and investment without touching the dollar. This architecture could eventually attract countries in Asia, Africa, and South America, especially those already frustrated with Western-dominated finance. But the implications go further. A fully operational yuan-centered payment system would challenge the dollar's monopoly on global energy trade. Oil deals priced in yuan, or settled through digital payment rails controlled by China, would represent a fundamental shift in global economics. For decades, the petrodollar served as the backbone of American financial power. If the petrodollar weakens, the U.S. loses one of its greatest geopolitical tools. While these financial systems evolve, an equally important transformation is occurring in the world of technology. Semiconductor supply chains, once highly globalized and interdependent, are slowly splitting into competing blocks. The United States and its allies still control the most advanced chip technologies, with companies like TSMC, ASML, NVIDIA, and Intel holding essential components of the ecosystem. But China is determined to break through these barriers. Over the past few years, Beijing has invested hundreds of billions of dollars into semiconductor development. This funding has created new research centers, expanded fabrication plants, and accelerated the development of homegrown alternatives to foreign chip technologies. Although China still cannot produce the most advanced chips at scale, it has made rapid progress in mid-range and specialty semiconductors. Domestic AI chips, memory modules, and industrial processors are becoming competitive, reducing reliance on U.S.-controlled hardware. Meanwhile, the United States faces its own challenges. The semiconductor industry is global by nature, and American companies rely heavily on China as a key market. When Washington restricts exports of advanced chips, U.S. companies lose billions in revenue. NVIDIA, AMD, and Intel have already suffered financial losses because they can no longer sell high-performance chips to China. This creates a feedback loop. With fewer profits, American firms have less money to invest in innovation, which slows down their technological leadership. China understands this weakness. Every restriction imposed by Washington motivates Beijing to accelerate domestic innovation. And as Chinese companies improve, they begin competing directly with American manufacturers, not only inside China, but in global markets. This competition is slowly changing the landscape of the tech industry. But the technological split goes beyond semiconductors. It includes digital infrastructure, AI platforms, satellite navigation systems, cybersecurity networks, and energy technologies. China is building its own digital world, complete with unique standards, protocols, and communication frameworks. This new ecosystem reduces China's reliance on foreign systems and creates an environment where Chinese companies can dominate entire sectors. Russia's role in this technological alignment is often underestimated. While Russia does not have China's manufacturing scale, it possesses deep expertise in military technology, cybersecurity, and advanced research. These capabilities complement China's industrial power. Together, they form a partnership where both nations can share knowledge, resources, and strategic advantages, strengthening a technological bloc that is increasingly independent from the West. The most striking example of this cooperation is in artificial intelligence. China is rapidly becoming a global leader in AI applications, supported by massive datasets and expansive digital infrastructure. Russia contributes advanced algorithms, defense-oriented AI models, and specialized research. This collaboration allows both nations to compete with American AI systems in areas like surveillance, defense, logistics, and energy management. The deeper the cooperation grows, the more the world moves toward a divided technological environment. Countries across Asia, the Middle East, and Africa are now choosing between American systems and Chinese systems or integrating parts of both. This creates a new kind of geopolitical competition, not over territory, but over digital influence. In the past, empires were built through land and armies. In the modern era, they are built through finance and technology. China and Russia are constructing a new architecture of power, one that is designed to be immune to Western pressure. Their goal is not just survival, but the creation of a multipolar world where the United States is no longer the unquestioned center of global authority. And while the outcome of this transformation is still unclear, one thing is certain: the world order is shifting, slowly but decisively, towards a future defined by competing currencies, competing technologies, and competing visions of global leadership. As the global landscape continues to shift, China and Russia are not merely reacting to Western pressure. They are actively designing a new model of international cooperation. This model is rooted in two fundamental pillars: financial sovereignty and technological independence. Together, these pillars form the backbone of a long-term strategy aimed at insulating both nations from external influence while reshaping the balance of global power. For decades, the international economic system operated under rules created and enforced by the United States and its allies. These rules governed everything, from global banking to digital infrastructure to energy transactions. Western institutions such as the IMF, World Bank, and SWIFT system acted as gatekeepers of global finance. Meanwhile, American companies and European firms dominated critical industries like chip manufacturing, telecommunications, aerospace, and advanced machinery. But the world of 2025 is no longer the world of 1995 or even 2015. The United States remains powerful, but its ability to enforce compliance has weakened. Economic sanctions, once seen as the ultimate non-military weapon, no longer guarantee the same level of impact. Countries have observed how Russia adapted and survived even under unprecedented sanctions. They have seen how China responded to U.S. export controls by accelerating investment in domestic technology. For many nations, these events proved that alternative pathways exist, pathways not dependent on Western approval. And so, a new question began circulating around global capitals. If China and Russia can break free, why can't we? This question has become especially relevant for countries in the Middle East, Africa, South Asia, and Latin America. Many nations are tired of volatility in the dollar. They are wary of becoming collateral damage in geopolitical disputes. They are frustrated with the slow pace of development loans, the restrictive conditions of Western financing, and the disproportionate influence of the United States over global institutions. China and Russia saw this frustration as an opportunity to offer an alternative. China's Belt and Road Initiative, BRI, laid the foundation for new economic relationships spanning 3 continents. Infrastructure projects, from railways to ports to digital fiber networks, expanded China's influence in dozens of countries. What began as a development project has evolved into a geopolitical system that rivals the traditional Western model. And now, with de-dollarization accelerating, China is encouraging partner nations to settle trade in yuan rather than dollars. Russia, despite sanctions, continues exporting vast quantities of energy, grain, fertilizers, and raw materials. Its economic connections to Asia and the Middle East have strengthened, not weakened. As countries see Russia continuing to trade without relying on the West, the idea of a multipolar financial world becomes more realistic. This trend is not simply about economics, it is about autonomy. Nations want the freedom to trade, develop, and innovate without being pressured into Western-aligned policies. China and Russia offer them that option. At the center of this global transformation is a new form of power competition, one that is not fought on battlefields, but in boardrooms, data centers, factories, and central banks. The defining resources of the future are no longer oil or steel, but semiconductors, digital infrastructure currency networks, artificial intelligence systems, space technology, renewable energy platforms. Whoever controls these systems controls modern civilization. China has recognized this for years. Its Made in China 2025 blueprint made technological sovereignty a core priority. Since then, despite external pressure, China has poured trillions of yuan into developing domestic capabilities in robotics, aerospace, AI, quantum computing, and semiconductor manufacturing. The results are uneven. China still lags in certain high-end chip technologies, but the progress is undeniable. Russia, for its part, brings strengths in defense technology, cyber capabilities, aerospace engineering, and energy infrastructure. While Russia cannot match China's industrial scale, it provides strategic depth, innovation in certain military technologies, and an independent political stance that challenges Western dominance. Together, the two nations complement each other. China provides markets, manufacturing power, and global investment networks. Russia provides security expertise, energy supplies, and geopolitical leverage. This alignment is not a short-term partnership. It is a long-term strategic project with implications that extend far beyond Asia. In fact, the West increasingly views this alignment as a direct challenge to the foundations of the existing international order. Washington and its allies worry that if more countries join yuan-based payment systems or adopt Chinese digital infrastructure, the U.S. may gradually lose the ability to shape global events. This concern is particularly strong when it comes to the dollar. The dollar's global dominance has allowed the United States to finance massive deficits, borrow cheaply, and apply powerful sanctions. If large parts of the world shift to trading in yuan, rubles, or local currencies, American leverage weakens significantly. Already, there are signs of change. Saudi Arabia is considering accepting yuan for oil. African nations are adopting Chinese digital payment systems. India is settling some trade in rupees. Southeast Asian nations are experimenting with regional currency swaps. BRICS is exploring a shared digital currency for cross-border trade. None of these moves will dethrone the dollar overnight, but collectively, they represent the most serious challenge to dollar dominance in nearly a century. At the same time, the semiconductor war continues to intensify. The United States is tightening export controls, investing in domestic chip manufacturing, and pressuring allies like Japan, South Korea, Taiwan, and the Netherlands to limit technology transfers to China. Yet these actions may have unintended consequences. By shutting China out, Washington has essentially pushed Beijing into building a parallel semiconductor universe, one that could eventually become a global competitor. This mirrors what is happening in the financial world. Two separate systems emerging side by side. The global economy is slowly fragmenting into blocks, one centered around the United States, the other around China and Russia. Each bloc has its own technologies, currencies, regulations, and alliances. For now, the Western bloc remains stronger in advanced technology, but the gap is narrowing. China is catching up at an extraordinary pace, and Russia's experience with sanctions has made it more adaptable than many expected. This fragmentation introduces risk, but also opportunity. Countries that once had limited options now have alternatives. Nations that relied heavily on the West can now diversify. Regions that were economically stagnant can partner with new investors. Yet the world is also becoming more unpredictable. Competing systems mean competing interests, competing standards, and competing visions of how technology and finance should operate. As the race intensifies, the question becomes, who will shape the rules of the 21st century? Will the United States maintain its traditional leadership through innovation and alliances? Will China rise to become the world's next technological and financial superpower? Will Russia reshape the energy and security landscape despite sanctions? Or will a multipolar system arise, one where no single nation holds absolute dominance? What is clear is that the transformation now underway is irreversible. The world is no longer unipolar. It is no longer bound to a single currency or a single technological model. It is moving toward a future defined by competition, resilience, and parallel systems that reflect different values and priorities. The choices nations make today about currency, chips, alliances, and technology will determine their place in this new world, and the consequences will echo for decades. As we step back and look at the broader landscape taking shape, one thing becomes absolutely clear. The world is entering a transition that is deeper and more far-reaching than most people realize. What China and Russia are building is not simply a temporary reaction to geopolitical tension. It is the foundation of a parallel global system, one they believe will safeguard their sovereignty, strengthen their economies, and ultimately reduce the immense leverage the United States has long held over global technology and finance. This transformation will not happen overnight. A shift of this magnitude unfolds slowly, through hundreds of small steps, each one altering the balance just a little more. China will continue expanding its semiconductor ecosystem, reducing reliance on Western components and building supply chains that it fully controls from the ground up. Russia will keep strengthening energy partnerships, deepening financial integration with Asian markets, and shifting toward currencies that cannot be frozen or blocked by Western institutions. Individually, these actions may seem modest, but together, they represent a clear long-term strategy to create a world where American sanctions, American technologies, and American currency are no longer the gatekeepers of global progress. For the United States, adapting to this new landscape will be difficult. As more countries experiment with non-dollar trade, Washington's financial influence may gradually shrink. As China accelerates its semiconductor advancements, U.S. tech companies may lose not only a massive market, but also their monopoly on cutting-edge innovation. And as Russia and China deepen their coordination, technologically, financially, and strategically, the West will face a rising coalition that increasingly defines its own rules. Yet the outcome is far from predetermined. The U.S. still has enormous strengths: unmatched research institutions, world-leading companies, deep alliances with technologically advanced nations, and a financial system trusted for decades. The question now is whether Washington can adapt fast enough to maintain this leadership in a world that is no longer unipolar. Meanwhile, for countries outside these major power blocks, the unfolding shift brings both risk and opportunity. Nations across Asia, Africa, Latin America, and the Middle East now have more choices, more trading partners, more financial pathways, and more technological options. But with those choices comes uncertainty. Competing financial systems may complicate cross-border transactions. Divergent technology ecosystems may create fragmented digital environments. And rising geopolitical friction may push smaller nations to pick sides in a contest far bigger than themselves. What's emerging now is not a simple rivalry between countries. It is a global reordering, an economic and technological evolution that will influence how the world trades, communicates, manufactures, and innovates for decades to come. The quiet moves China and Russia are making today will shape the global future just as profoundly as the major breakthroughs and power shifts of the last century. These two nations understand something essential. In the modern world, real power comes not from who wins wars, but from who controls the systems everyone else depends on: chips, money, energy, data, and supply chains. As we enter this new era, one truth stands out above all. The world is no longer defined by a single center of power. Instead, it is becoming a complex and competitive landscape where influence is earned through resilience, strategic vision, and the ability to shape the technologies and financial networks of tomorrow. How this story ends is still unwritten. What is certain is that the decisions being made right now by governments, by corporations, and by nations large and small will determine which powers rise, which decline, and what the next global order will truly look like.